Forex Insights with CIS Trading at thinkorswimtoolkit.com. First in focus is the US dollar Chinese yuan. At the bottom of this downtrend, we have a diamond reversal pattern with an inside bar, outside bar, inside bar. When we look at the top of this intermediate trend, we have the same diamond reversal there and the move down to here. When we look at a weekly chart of the US dollar Chinese yuan, we have a diamond pattern at the top and a diamond pattern down here at this low where we have an inside bar, outside bar, inside bar with these three doji stars on the weekly chart. However, we haven't seen a move to the upside out of this diamond reversal yet. Instead, we have this range-bound trade between the high and the low of this center bar on this diamond reversal. This is significant because when we look at the euro and the Swiss franc, we have a bearish piercing low and a range-bound trade between the high and low of that bearish piercing low. When we look at the British pound against the Swiss franc, we have a bearish spinning candle and a range-bound trade between the high and low of that candle. When we look at the US dollar and the Swiss franc, on a longer-term basis, on a monthly chart, we've been in a range-bound trade between the body and the high of this bearish piercing low on the monthly chart. What this means is when the US dollar Chinese yuan either makes this reversal and goes higher or goes a deviation step below this center bar on this diamond pattern, we're going to see that influence and that reflected within the Swiss franc trade. When we look at the US dollar versus the South African rand, we're starting to see better price action metrics in response to momentum and a greater range of trade for the first time as the dollar strengthens. What I think this means is when it comes to pairs relative to the US dollar, we're going to get a better range of trade within those currency pairs in the near term. When we look at the Japanese yen, we're going to see strength until there is some fundamental change globally, or until there's a culmination of technical conditions within the foreign exchange markets that changes that trend direction. The New Zealand dollar, the Canadian dollar, and the US dollar have all been the weakest, the longest, as far as the Japanese yen is concerned. I think that they will strengthen first if there is a trend reversal. They are a better indicator of the trend as far as the Japanese yen is concerned. They offer better trend metrics. They move with longer-term bonds and yield curves. The Australian dollar, the British pound, and the euro have a better range as far as their trading range, but they have a higher volatility with swings, so they have poorer trend metrics when it comes to the overall trend. The Canadian dollar and the Australian dollar, when we look at the euro versus the Australian dollar and the Canadian dollar, the euro offers a better trend quality for the longest period of time against both the Australian dollar and the Canadian dollar. When we look at the British pound versus the Canadian dollar, we have better price range movements there. The same thing with the British pound and the Australian dollar. When we look at gold and silver versus the US dollar, when we look at those charts, we can see the same exact price action metrics reflected from gold and silver as we do in the British pound and the Australian dollar versus the US dollar. The New Zealand dollar, the Kiwi, when we look at the New Zealand dollar versus the US dollar, the trend metrics are similar to high beta stocks like Microsoft. We can see that very clearly when we look at a chart of Microsoft. This is CIS Trading.